Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. As always, a lot of volatility in the markets right now, guys. People are starting to get a little scared. Well, we're going to tell you how to profit from volatility. Let's dive in.
Trade Genius.
All right, Bob, show them how volatility can be profitable versus, I don't know, scary.
Well, I don't like to go long volatility, but I like to go short volatility. So let me throw the chart up here to show you. And just take a step back. Usually July is one of the more bullish months of the year, but I think we're being overtaken a little bit by some events. You have, geopolitical, you have internal politics. You also have, I think the rate are starting to bite a little bit at the corporations. People are starting to feel it. And at the same time, what we're seeing from, market activity is mostly it's companies buying back their shares that have been driving the stock market action. And they're in blackout right now. So we got to move down bigger than I thought. The encouraging thing, though, Phil, is that Bitcoin, gold, and silver and energy are holding up. So your premise for your monologue was this isn't the end. This is some sort of dip that we should buy. And this chart here is giving me the reason for that rationale. This is the VVIX, which is the volatility of volatility. It means that volatility is expanding at an accelerating rate. And usually when VVIX pushes over, the 100 to 110 area, it means that puts are getting so expensive now for insurance and people are so profitable that had the foresight to be inputs is that it's a self-correcting system. And we had the same thing that happened in April. And we noticed if you look at that chart as we go back in time, it really struggles when you get to that dashed line area, which is basically a standard deviation of activity. And it's blown through that. And so this is where you want to actually be counterintuitive. Bought SVIX today, which is the next chart I'm going to show you. And you could probably put a trade in, maybe some SPY calls here. And as long as you have determination to hold it for, at least to the Fed meeting next Wednesday. And I think this is a little bit of the temper tantrum too, to force the Fed to become more dovish. So when you look at SVIX here, which is the short volatility index ETF, and by the way, this one you should always be looking to buy the dip. One of the most reliable trades out there. So we've gone from high to low in April down 19 point some percent, Phil. And then now we're about at 19% down high to low on SVIX. And if you notice, these moves happen pretty fast down and then they start grinding higher again. So my thesis, Phil, is that on a red week, fourth week of the month, which is the week after OPEX, you get a bit of a relief rally Thursday, Friday into the weekend. And then people probably don't want to be too short going into a Fed meeting that you're already having people like Dudley out there talking about, driving rates down lower because the Fed has overdone it. And so people aren't going to want to be hanging over their skis here and have the Fed do a surprise cut in July. And so I think we'll see a bit of a relief rally into the Fed meeting. And then it's going to determine how hawkish or dovish they are, how August will be. But I think August into September, Phil, will be generally bullish. Will it make a new high? I don't know. But the blackout window ends. Companies will be buying back their shares. They tend to be the big companies that affect the index. And then I think we'll see a grind again higher. What do you think? Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
I think this ultimately is a dip to buy. And the reason for that is because whenever you see the markets go directionally into an FOMC day, and rarely it's been down. Last time we saw that behavior was back in 2022 when we had our first correction from the post-COVID pump, I would call it. So whenever you get this directional move down into FOMC, I personally expect the move to kind of sustain or at least not pop until after the FOMC. FOMC is actually falling on the last day of the month, which doesn't normally happen. And that's an interesting setup as well because, there's window dressing typically at the last day of the month. So I think we have a setup that if we're down into that FOMC day next Wednesday, last trading day of the month, that if they start talking, and it's more about what they say down the road. If they're dovish and talking about rate cuts, and then September rate cuts become a higher probability, then I think we could have a substantial rally off of that. Even as the day closes, the month end closes, you could have a rally up into that daily close. But definitely as we start into August, the first 2 weeks of August is extremely bullish. If you look at the seasonality of election years, there's a couple different charts. One is if you have a strong Q1. We haven't really followed that one for the month of July, but we are following the typical election year seasonality, which does show a dip after the middle of July. We're certainly getting that here. And then after that dip, you get a dip buy that runs up into the middle of August. So if you look at the charts and the way things are setting up, it certainly looks like that. We're hitting the 50-day moving average on the futures as well. And on the S&P 500, the actual index, we're hitting the weekly 9 EMA. Again, these are big reference levels. So looks really bearish here, but I think ultimately it will hammer out a bounce. Now, we might go up and down here a couple times and hammer out a low, but I think if we can base in this area, you're going to have a tremendous rally going into August.
Yeah, I agree with you. I think a tradable bottom into the weekend and get back out, and then a tradable bottom in the Fed meeting. Totally agree with that. And look, if Bitcoin's up, gold and silver miners are essentially up, energy is essentially up. This is not a deleveraging. This is a bit of a run to safe haven, while the big index, the big boys in the index are drawing everybody else down. ExxonMobil's in the S&P 500. It initially succumbed to the move, and then they just rallied it hard. So I just think that it's a dip to buy, and you don't have to be cute about it. You know, if you're off a couple days and you think you're going to get a 2 to 3 week rally, build your position. Same with TLT. Keep building that position, because if it's not July, and even if it's not September, the long rates will start coming down at the market and economy continues to weaken. So hang in there. Tomorrow we'll give you a couple charts that should scare you again, but at least there's some trading in here that's to the positive. But the macro picture is deteriorating rapidly, but it doesn't mean you can't make money on these relief rallies. In fact, you can make the most money on these relief rallies. So stay tuned.
Trade Genius.